Prep. Spencer Israel, Dennis Dick, no Joel. Joel's out today. I don't even know where he is, but he did tell me about this, and I remembered about 5 minutes ago that he'd be out today. But you got me, you got Dennis, and we got a lot to get to today. First off, we got to talk about Friday's close. If you didn't see some of the action there, if you didn't see what happened to Shopify, well, pull up that chart. We're going to enlighten you as to what happened on Friday and why it may have happened and the implications of that. Story of the day today is going to be Boeing. Another tragic plane crash. A Boeing plane crashed overnight in China. So that's going to be your story of the day. We have some M&A to discuss. Anaplan. Berkshire Hathaway making a deal. They haven't made a deal like this big in a while. Nielsen said no to their deal, so it's trading down on that. Tim Quast is today's guest for Market Structure Mondays. So that's the schedule for the day. Smash, or at least for the show. We got a lot more happening after this, obviously. But smash that like button, and here we go. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right, because Joel is not here, I will bring up my charts today. We can get a feel for what is happening over in the SPY, because we like the SPY. Futures are cool in the pre-market, but I like the SPY because it's simpler to understand the day-to-day action because you can very clearly see. So we are mixed this morning. You can see the SPY. I mean, we'll call that flat, right? It's up 8 cents. So that, to me, that's flat. And just going across the board, there. Stock futures broadly flat. Everything is up a little bit or down a little bit. NASDAQ flat. Russell, same thing. We'll go to the USO again because it's easier for me to see the different sessions. Oil up 1.3% this morning, continuing the strong week it had last week. So USO up, and I will look at the GLD because, again, I like that over the futures. Gold trading down. Looks like a Bitcoin. I have not looked at Bitcoin today. How's it doing? BTC, USD. What's going on with Bitcoin today? Okay, flat. Down 41 bucks. All right, whatever. Let's bring Dennis on. Dennis, good morning. How was your weekend?
Weekend was good. Not too much. I don't know. I don't even remember what I did, really. I don't do much here. Just it's wintertime still up here. So actually my kids did some tobogganing still, believe it or not. We still have we still have snow here. So I know it's hard for you to believe in Detroit, but we still have like 2 feet of snow on the ground. It's starting to melt though. This week did some damage because we had 40 degrees multiple days, so it's starting to melt.
Well, I'm not sure what's hotter down here, the weather or the market, because both seem to be like they're turning. But we'll talk about that. But let's start with Friday's close. I saw you tweeting about it. I saw some stuff on Friday as well. We were obviously live at the close, and I was watching to see what would happen into that closing print because we knew we had options expiration. We knew we had some major index rebalances, and there was a lot of like big. There's always bigger candles right on the close and big volume, and there was some of that. But there was a couple of stocks that had just like extremely exaggerated moves.
Yeah, they did.
And I guess we should probably start with Shopify because that was the one that set off alarm bells. And
it was one of the craziest closes I've seen probably in the last 10 years. Like for just some stocks, like you said, a lot of stocks did a hell of a lot of nothing, but there was some extreme moves in a couple dozen stocks. And if you look, Shopify, no more extreme move than this, which I don't even know if you can see the print on there, but it's there. So stock had a huge buy imbalance at the close, which meaning there's like a big order to buy. And didn't get offset, at least not enough, because the DMM took the print up $80. So what does that mean? It means the stock gapped up $80 on the closing print. Can you show my tweet? Just show because we can see the actual trade, which I took a screenshot of from the time and sales window because it's a good educational tool too. This is why you also never use market on close orders, because sometimes you get market order and it can just go crazy. So you can see the stock trading $6.99, and the New York print was 5 minutes late because they're trying to put it together. There's still on New York, there's still a human being that actually helps, and obviously automated systems help to do it too, but they're still putting it together. 821,000 shares traded up $80. So if you see the official close on Shopify is $780. It was trading around $680 when the buy and balance, I guess, must have posted. I actually missed this one. I was trading a lot of stocks and it was a really good close, but I missed this one. Stock gaps up the $80 on the close, 821,000 shares. If you do the quick math on that, that's about $65 million on that order too high, meaning that order was printed 80 points above where it probably should have been. So somebody pissed away 65 million bucks there. And not saying it's one person, it's whoever was on the MOC buy side. Though that money would go to whoever is selling it. And there's multiple traders that actually reached out to me. A few people got that sold. If you had a limit order sitting out in the NYSE and it was, you didn't get picked off right before the close, you would have been executed at 780. So you would have had your 710, 715, 720 sitting there, LOC on the New York Stock Exchange. You would have got printed at $780 a share. And what's interesting too is the repercussions from all of this. So one thing to consider is trade 780 and it was immediately back down. You can see that print is just an outlier. Yep. It's trading down $72. There's no chance you're getting 780 here, unless we have a ridiculous market rally. But, it's not opening up here. It's not like it's back at 780. It's not like it's really down 72 points. It really should have never closed up there, but it did. And what does that mean? Well, anybody who's got options those will go to automatic exercise. The OCC, the Options Clearing Corporation, will automatically execute anything that's in the money. So if you had, let's just say, some hypothetical situations, there was a lot of open interest, but let's say you had the 750 calls on Shopify. Well, the official close is 780. So OCC will see you 30 points in the money and they would automatically exercise your 750 calls. So you could come into and come in this morning into your account and see, I bought Shopify at 750 on my call. What happened? I'm like, well, the official close is 780. So you buy at 750, you're down 43 points right now. So kind of vomity when you think about the the fallout from all of that. And there was a lot of open interest on those weekly calls. So what you would have to do in that case is actually go to your brokerage and know to go this, call your brokerage, whatever it is. On an interactive brokerage, it's called lapse. You just go and automate and you just hit, I don't want to exercise the option. But you would have to actually say, do not exercise, DNE it, lapse. There's different words for it, depending on which brokerage you're using. But you don't want to exercise those 750 calls because there's no chance you can be able to sell at 780. So, and because the print's already happened. So just long story short is there's probably some traders that got exercised on those calls this morning and they're down a lot of money if they weren't, you could have even been like, oh, I had the 725 calls, maybe you left for the day. And you're like, well, that's no chance. And you left it open. So it's a good learning experience. You shouldn't leave your calls open ever. And if you are leaving, you should give them the do not exercise notification in case something like this happens. Again, I haven't seen a stock gap up like this in a long, long time, that much. So it's rare to see something like this. But there's some call buyers that probably got screwed on this.
Don't leave them open at expiration.
Yeah, you could close them out, just sell out the options, or send your notification. If it's out of the money, you just say do not exercise, and then the OCC will not exercise you. Because it's an option, you don't have to exercise it. But if you don't give them any indication and the stock closes in the money, they will automatically exercise the option for you because they figure you're saving yourself money. But I mean, in this case, the 780 was a bogus print, although it's a real print, not bogus. It really traded up there, but it screwed up the close, screws up all those options. 710, 725, 750, 775 calls would all get exercised. And there's no chance you're ever turn around and selling it up there, unless you had the order out there ahead of time. So
why do we think, and all we can do is speculate here, but why do we think there was basically 822,000 shares out there, sitting out there at 780.
Somebody maybe.
So two ideas.
Yeah, sure, go.
One, you have a serious options whale with a lot of options expiring. Maybe, I don't, or someone thought that the Shopify was part of that rebalance, and they threw a bunch of orders out there.
Even stocks that aren't on the rebalance, when you're on the third Friday of the month, you have institutions jockeying positions, doing lots of different things. And we can't, we can guess, but there's no real knowledge for why somebody sends a market order for, and I don't know if it's one person, if it's multiple people, multiple institutions, but why some institution, uses, I never use MOCs at all. There's a difference. You can use an MOC or an LOC. I always use LOC, which is limit on close. I specify my price. MOC is fill me at the closing price no matter what. You send a market on close, you're getting filled at the closing price on the buy side no matter what. And in this case, the money was made if you were shorting it, LOC, or selling it, LOC. But if you were buying LOC or MOC, I should say, if you're buying MOC, you lost. So I always say to all of our traders at Bright Trading, give your price. You can use limit on close, works the same, but specify your price. You could say, okay, well, I want to buy Shopify at the close. I'm going to put 710. Close 780, you don't get executed. You put MOC on that, and you're done up there. Yeah. And somebody literally just threw away $65 million. Some of that and that money went to whoever was in the book. Obviously, the DMM would have made some money off of it too. Yeah. It's a ridiculous print. You used to see more of this years ago. You don't see it so much anymore. The high frequency traders are really good at offsetting it all. So it minimizes the impact. But, this wasn't the only stock that did this. So I didn't participate in this one, but I did participate in a few of these.
Verizon.
Let's bring up Verizon. Yeah. This was the one I was focusing on. So I have an automated system that sends out orders on a lot of the big S&P companies. And it picks it and it'll send out sell short orders above where this thing is and buy orders below. So basically it's called envelope program, where I'm enveloping the close. I send out my program before the close. So if there's a gap up, I'm going to be short. If there's a gap down, I'm going to be long. Shopify is not in that program because it's a really wild stock. So I don't have it in that program. So the only way I would have got it is if I manually discretionary noticed it and put the short out there. If I would have noticed it, I definitely would have put a short sell out there. But I just didn't notice it. Didn't notice the imbalance. But my program picked up a bunch of trades. It picked up Verizon, picked up Hewlett Packard, picked up Colgate, picked up Chevron, picked up Home Depot, picked up PayPal, picked up Square. That's all. I didn't notice those. My system picked it up. So, but Verizon I did notice. So I noticed it was 12 million shares to sell. I'm like, that is huge. The stock starts going down when the imbalance gets posted at 350 and just starts getting hit. And this is Verizon, conservative stock. So I put extra buy orders out there too. And I got it filled on it all at $50.80 on the close, which was the close. And I was able to flip it out after hours, literally like a minute after closes for a quick 35-40 cents, which is nice. So on a stock like Verizon, you're talking 0.8%. That's a pretty good trade.
Nice.
And again, going to the other ones, I got long Colgate was another one. I didn't even notice this one at all. My system picked it up, but it bought it at $72.20, and I was able to flip it out at like $73 after hours. So you can see way down there, like literally flipping it out like right after, immediately after. So there was a good opportunity. There was some gappers there for sure. Nice. The Verizon and the Colgate were two big ones. Hewlett Packard had run up, Square ran up, had a big buy imbalance. PayPal had run up ahead of it. It had an imbalance as well. Home Depot gapped a little bit. Signet Jewelers, SIG, gapped down. But nothing was like Shopify. You didn't have any stocks. We're talking like 1% gappers here, not talking 10% gappers. And that's what Shopify was. It was more than a 10% gapper, which was just absolutely ridiculous. So I'm sure the DMM got some calls on that saying, what the hell happened there? But I mean, the print's the print. I've never seen them. I don't remember seeing them adjust an NYSE closing print. That's why some people were calling for an adjustment on it on Twitter, saying this is ridiculous. And I was like, if they're ever going to adjust one, it would probably be this one. But I'm like, I've never seen them do it. And as soon as you don't get notification, they can get subscribed to NYSE updates and alerts. As soon as I didn't get notification by like 4:30, I'm like, they're standing this. Like, this is the close. And people are fighting me. This isn't the official close. I'm like, it is. It's done on the NYSE. This wasn't like an outside, this was the close. This was the closing print. 800,000 shares printed up at 780. The official close, on your screen right now is $780. It's showing it down $72. You're like, oh, what's the news? No, it should have never been up there. It's back to where it should be.
That's
780 was a gift
the way
for
it
the
goes.
sellers and a mess up for the
Maybe if our
buyers.
market, maybe if this was more like the London Metals Exchange, they would just bust all those trades. But because we have an actual fair market here in the U.S., they're not going to do that. But
yeah, I mean, it's not fair. But think about the person who sold this.
I guess I should.
You got your 720 out there, you get filled at 780, you're all giddy. I mean,
We have
is it
not
fair
a
to just go in there and bust all their trades too?
No, that's my point. We have not a rigged market where they're going to go back and just do that because at the benefit of some whale somewhere. Well, but let's move on.
Everybody's calling for us to move on. I just want to say, we try to be a teaching show here. We give the news, but this is a teaching tool, and we're trying to teach traders, certain things. There's multiple things to be learned here. One is don't use market on close orders. Two is if you've got your options, close those things out. Don't leave them open-ended because there's going to be some people who really, really got hurt on this. They're going to come in this morning. They'll be long Shopify from like 725, 750, and they're going to lose some money here because they left them open-ended. So we want to teach stuff, John. If you don't want to listen to that, that's fine. But what I'm trying to say is we're trying to teach things. And I think people appreciate the teaching. I think if we voted in the chat right now, I think people like to learn stuff.
That's enough of that, John. All right. Put you on timeout there for a minute. All right. That being said, though, let us move on because
we're moving on.
Yeah, we're moving on. Unless one more thing. No, I'm just kidding. Okay. So story of the day. Boeing, obviously, if you didn't hear by now, there was another crash involving a Boeing plane. It was a Boeing 737, but it was not a 737 MAX. It was a 737-800 being operated by China Eastern Airlines Corporation. Details are scant right now. All we really know is that 132 people were aboard the plane. We have data about where and when and how high and how fast, but we don't know the important thing, which is casualties, obviously.
Yeah.
So that being said, we've seen this before from Boeing. It is we talk about when stocks are headline sensitive. There are very few stocks as headline sensitive as Boeing.
To a plane crash for sure.
And I will just bring up a weekly here.
Yeah.
So you can see, these huge gaps on this Boeing weekly. These are plane crashes. That was a plane crash. That was COVID, but that was a plane crash.
And it was worries about the Max too. Like, I mean, you had gap ups where they were fixing the Max issues. Remember, like how many times we gap up or down on Max stuff?
Yes, a lot, a lot. So anyway, there's not much to say about it because I don't like reducing tragedies to let's see how the stock is doing. Obviously, it's going to trade down on this. But again, details are scant as far as what I'm seeing. It is a very widely traded stock, a very thick stock. So this will be the story of the day. I hope we learn more soon. I just saw this from the WSJ that was citing the Aviation Safety Network that this specific plane, the 737-800, has been involved in 22 hull loss incidents since entering into service in 1998. Plane flying, still statistically the safest way to travel, but when you have crashes like this, obviously it puts people on high alert. So
for sure,
apparently let's see, it was flying. This specific plane entered into service in 2015. Was traveling at 457 knots. It's about 530 miles per hour at about 29,000 feet, 2:19 p.m. local time.
What time is that here? Like, when did this happen? Do we know?
I think they are 11 hours ahead of us.
I'm really throwing you under the bus on this one.
Yeah, you are. I think they're 11 hours ahead of us.
Yeah.
So, again, I'll be watching this throughout the morning and hoping we can get some details on the actual, human cost of this. But obviously, this is going to be your story of the day. Don't be surprised if, broadly speaking, airlines trade down as well today. I mean,
yeah, I mean, you're going to see that. And it's, obviously I don't like going and just talking about, what are the repercussions for the stocks when you think about, the tragedy of a plane crash and, likelihood a lot of people, if not all, get killed in something like
wait,
that. It's terrible.
sorry, I just want to clarify. When I said whole loss, sorry, whole is in a plane hole, HULL, not like a whole plane, like the whole, the whole.
Yeah.
Sorry, the whole of a plane. Sorry about that. So
chat saying 4 a.m.
Thank you,
is
Chad.
where what happened. That's what RJ said, around 4 a.m. Eastern. So bring up the chart of Boeing. You can bring it up. It's bounced off of the lows. I'm not going to give an opinion on it. Full disclosure, I do have a position on it, so I'm not going to give a full opinion on it. I'm just going to say, what's happened. Obviously, you can see the stock, open gap down, and we ran down. I think we hit a low of around 176 this morning.
Pre-market low is 175.36.
175 and change. So we're off the pre-market lows. I'm not going to give any opinion on it again because I have a position on it.
Yeah. Again, just a very sensitive stock in general. It has never gotten back to where it was. Again, this gap down on the weekly from March of 19. This was the first 737 Max incidents there, and then there were several, and it has never gotten back there 3 years later. So yeah. All right, let's move on.
I mean, we can talk the other airlines too.
Oh,
so
sure,
let's talk.
sure.
American Airlines down, UAL down, Delta down.
Yeah.
You're going to see the airlines all get hit here this morning. Is it a buy the dip opportunity? The market isn't buy the dip mode. That's all I'll say is, the market is looking for dips to buy. So it would not surprise me if some of the stuff bounces back.
And so DH in the chat asking about whether we'll actually get information from China. Some of the information is going to come not from China, but from like these international aviation agencies that like monitor all flights around the world. So I hope we get more information. Obviously, the more the better. I will say it is remarkable though. If you just think about how we had this plane crash happen, 4 hours ago, and we already know when, we know where, we know how high, we know how fast. It is impressive.
Information we get from those black boxes is pretty impressive.
Yeah. Yes. Concur. Okay. Merger Monday.
Yeah, we do.
Monday. We have a number of M&A headlines to discuss here today. Let's start with. Okay, I guess
we have plan and why.
Yeah. All right. Well, we have a third one too. So, okay. Well, let's start with Anaplan. PLAN is your ticker on that. Getting acquired by Thoma Bravo. Shameless plug. If you guys missed it on Thursday, Jason Raznick did a Twitter Spaces with Orlando Bravo, who is a founder of Thoma Bravo, that private equity firm. Check it out on Twitter Spaces. But Thoma Bravo acquiring Anaplan today at a 31% premium. $66 per share in cash is the takeover price. Values the company at $10.7 billion. So if I bring up the chart, there you see it. And going off the board at $67. Pretty remarkable premium. Nice. We closed at what? We closed
it's
at
cash
50.
Deal?
Yes. We closed at 50.
Yeah, I know. And we were $42 3 days ago before the rally. And we should talk about this rally in these tech stocks because these growth tech stocks, holy mackerel. The China stocks kicked them off and they have not looked back. But I mean, this rally from 41 to 51 in 4 days because they were buying everything growthy. And now it gets takeover. So 66. So I guess, the trade's done on this one, obviously. You can see the risk arb. 66 the price?
60, what did I say? 67? I think it's 67.
So anyways, risk arbs. I don't know if it's 66 or 67. I didn't look it up. I've got 66 written down. So I'm assuming that may have been it. Unless I wrote it down wrong. So it's $1.10 down. So the risk arbs are putting the $1.10, discount on for time value
it's
money.
66. Yeah, you're right. 66.
Yeah, that's not. I'd ring the red. I mean, if you're in at 64 now, you sit around for the last buck. I'd probably ring the register and move on. Move your money to better places. So that trade's done. But let's just take it to the growth tech names. And this is something I definitely got wrong. I thought we could get a little bit of a bounce. I did not foresee, these kind of like this continued like Square, for instance. Let's just go to Square. I mean, this is incredible. It's went from $94 to 140 in 4 trading sessions. I mean, and then let's just go to ARK, and obviously you're going to encompass most of them by that, from 51 to 65 in 4 trading sessions. And we've talked about this, stocks that are in bear markets, the most wicked rallies are, that happen in bear markets, because you got shorts in there, you're squeezing people, you got FOMO that comes in once they start going. I mean, this is a wicked, wicked, wicked rally. So the short side had been too easy. That was the bottom line of the Chinese names, the growthy names. It's been too easy. I've talked about it for a while on the growth names being too easy on the short side, which is why I said I can't be short any of these, but I wasn't long any of them either. So at least not very many of them. I had Unity Software, which was one I had, and I actually sold that on Friday just because I feel like it's too much too fast. 73 to 96 in 4 trading sessions. I mean, this feels like a gift for a lot of these stocks that have really been beat up. I think if you're coming in now, you're really late to the party. But would I buy some of these on pullbacks? Do I think the 52-week low on a lot of these stocks is in. Unless it really gets ugly over in the Ukraine situation. I do think, now hindsight capital's 2020. It'd been nice to say that 4 days ago. But, it's, I'm not in the business of catching a falling knife. It's bounced enough now that it makes me feel a little more comfortable to say on a pullback now on certain things, I think you're getting in. So I think you're using dips on individual stories to rebuild some of that portfolio. And like I said, in long-term portfolio, I'm sitting over 50% cash right now. So I will be using some of these dip opportunities in certain stocks to get back in. I did buy one stock. I bought AMD on Friday in the long-term portfolio because I felt like AMD had this nice little 3-day consolidation. Didn't really participate. NVIDIA did. And maybe that's not a good thing, but I feel like there could be a little catch-up trade there. So it's the one stock that I did buy on Friday that's growthy. But I'm definitely underweight growth right now. So on pullbacks, I'll be looking to buy some of these.
So something you do, see and hear as a consideration is, all right, we know that everything ripped you last week, right? Tech especially. Mm-hmm. But what led and what lagged? What was leading the pack and what was towards the back of the pack? You look at what was leading the pack, it was stocks like Bumble, right?
Oh yeah,
stocks like you mentioned, Square, really beaten down names. A lot of Chinese stocks, obviously, and the skills. Like look at the week that skills had. Skills went from what's that? So it
$2 to 320. You're talking about a 60% run in 4 days.
Yeah.
But I asked the person. Here's the problem with you're going to hear about all the people that bought it at $2, but you're going to hear crickets from the person that bought it at 20, 19, 18, 17, 16, 15, 14, 13, 12. Get my point? Yes. There was a lot of money made in the last 4 days, but a lot more money has been lost in SKL Zebra than made.
Yes.
So, yes, some people were, got the $2.25, and you will only hear about those people on Twitter because nobody talks about their losers on Twitter. I'll talk about my losers, but the majority of traders aren't confident enough in their own skills to talk about their losers. They only want to talk about their winners because it has to build up their confidence because they're not confident enough in their own trading.
But my point in bringing this up, though, is like, what would you rather see? Would you rather see like the DocuSigns of the world and the skills of the world lead us, or would you rather see us be led by like, I don't know, Amazon, which was
it came back good too. Amazon did too.
Had a good week, and some of it is the law of large and small numbers here. Where it's much easier for skills to rip higher 50% than it is for Amazon.
Well, it's impossible for Amazon. So it's not even it's that, but it's the market cap's so much higher. It's impossible for it to do that. Really,
yes. But like Apple, which was only up 6% last week, and I say only again because like 6% is a great week, but consider what Bumble and Affirm and Asana and Roblox and Carvana did last week, right? And MongoDB and Etsy and PayPal. So
when the market's going up, you always want to be long higher beta names. Those are all higher beta names. When the market's going down, you don't want to be long higher beta names. So, I mean, that's what it boils down to here, Spencer. I mean, you're never going to see the apples rip 40, 50%. Right. The market caps are too high, but they don't go down 40 or 50% when these stocks were all going down like that either. So majority of my money is in the mega caps. I'm not in a lot of the small stuff, but I tell you, if you're in the small stuff last week, you had a really good week. And a lot of people did really well coming in. A lot of people made some money.
I'm just trying to make a point about like how, like thinking about last week's rally. right? Like the market will go up if like it can go up for several reasons, right? Last week it went up because everything rallied, right? But it can also go up if like just the FANG stocks rally because they're so large, right? We don't need everything to follow the FANG stocks because they make up such a large part of these indexes that they can drag the market with it. So I guess I'm asking, what would you rather see? Would you rather see those beaten down higher beta names lead us higher, or would you rather see like the FANGs and the mega caps of the world lead us higher? I don't necessarily know the answer. I'm just kind of throwing it out there. But it was just interesting to see. And so now I'm curious is like what is the continuation here this week? Do the mega caps continue to be strong? Because the second those things start to turn, I will get more bearish than I already was, right? Like, it's cool that everything was green, right? All tech was up last week. Not all tech, but most of tech was green last week, which is cool. But I'm paying more attention to the mega caps than I am to like those crazy high flyers of last week. And
I think the mega caps had a fantastic week, so that's why I was arguing your point. I think that's been a long time since we've seen Apple rally 6% in a week. That's a huge move for it. The question is, are we buying it now after big moves last week? I mean, I think you need a dip to come in here now, and maybe you miss it, but stocks move in like waves.
Right.
Like they move down and they come up a bit. They move in waves. It's rare for a stock to just V. You do see Vs. It happens. It happened obviously, with March 2020 and the COVID crisis. The SPY basically V bottomed. You can have Vs, and that could be the case, but it's more often they're in waves. So if you're a quantitative approach to this market, you're probably saying, I'm not going to chase it here. I'm going to wait for a pullback and then get in on the pullback here because, we waved down, we maybe overshot. Now we've come up. Now you wait for that little dip again, and then you move back in again. So I think if from a quantitative approach, I think, to your point, I think your point is wrong because I think that the mega caps had a fantastic week last week. I think it was big. We were led, what really led to wasn't ARK, it was China. China kickstarted ARK, which then kickstarted everything. So the Chinese names were so beat up, and we talked about those. Alibaba, Baidu. I mean, you see JD, Spencer. Like JD goes from 42 to 70 in 4 days.
Yeah.
This is nothing short of incredible. These are some of the biggest moves I've, for Baidu to go from 170 to 100 and back to 160. I mean, that's incredible.
I guess maybe I'm finding a way to complain because if the market had closed higher because solely on the back of the performance of like 10 stocks, then I would complain about the breadth. And so I guess I'm just finding a way to complain about this because I missed it, right? So
I'm complaining too. I missed it too. I'm full on like, usually I'm pretty good at catching the moves. I tell you, I missed this. Like flat out, like shitty missed this, and definitely looking at it like, I'm 50% cash. Does that suck? Big time. Big time. Now, again, I didn't just raise and sell yet last week. I sold a while ago, but it would have been nice to redeploy at the bottom. It's hard to get the bottom. So I think I can see now that the bottom is probably in, unless, it really gets ugly, obviously, in the Ukraine situation. So now that I can see that the bottom is likely in a lot of these stocks, now you wait and you use opportunities, even in individual names, to redeploy capital on dips. If we're back to the buy the dip mentality. I mean, if it escalates ridiculously over in Ukraine, or if if something else happens, a new catastrophe or something, then the story changes. But with the information we have today, it probably appears like the rally was wicked enough that makes me think that maybe even the 52-week low is in.
At a certain point, everyone who didn't buy, that's you and me and many others, last week has to ask themselves, all right, at what point are we wrong? And I mean,
I'm telling you, I don't have to say at what point I'm wrong.
You're wrong. You're wrong.
I'm wrong.
We're wrong. We're wrong.
You're wrong.
Yes, we're wrong.
We're wrong.
Yes.
No doubt.
Yes.
Wrong. Like right for a long time, but needed to get back in last week. Didn't get back in. That's why I picked up AMD. Hadn't went yet. Looking at stocks that, okay, well, this could be a catch-up trade. Need to get some capital working again. That one looks like a sleepy one that hasn't went yet to me. I mean, I'm not going to get the 100 if I think the market's going higher, but is the potential for this thing to get back up and moving again? Maybe. Maybe it's the wrong stock. That's why I would never put 100% of my money in AMD. But do you put 1% here, 1%, 1% here? I think you do. And I think you're using pullbacks on different stocks. Like I said, maybe even on a FedEx that pulled back last week on an earnings report. Maybe you're nibbling on that. Maybe you're using, some of the weakness in, some of the airlines and stuff today to redeploy some capital. But I think the biggest thing is you've got to admit when you're wrong. It's all about admitting when you're wrong.
Yeah,
I'm admitting on the show
you
that
are
I
very
was
good.
wrong to not be bullish last week.
Joel and I had talked about this about you. You're very good at changing your mind very quickly, and that's hard. That's a hard thing to do.
That's all trading is.
I know.
That's all it is 22 years of I'm wrong every day. I'm wrong on lots of things every day. Yes. Fix it and then, move on. So my opinion about, the bottom, could continue to fall out of this market. I don't know what's going on. Information, I don't have enough information is wrong. So I shouldn't be at 50% cash right now. I wish I was 100% invested last week. It would have been really good. I'm not going to go there, though, because there's a lot of unknowns. But would I be more comfortable if I was 70% stocks right now? Yeah, I would be. I'm a little uncomfortable that I'm this much cash. But I raised a lot of it the last couple of days because I just thought the rally's overdone, but it keeps going. So maybe it's going to V-bottom. Maybe I'm going to have trouble rebuilding it, but I know I'll get another chance. There's always another chance to get in stocks. Maybe not in your stock, but there'll be a chance to get in a stock.
Yeah.
So you've got to, change your opinions and figure it out. And as of right now, it appears that the 52-week low could potentially, never know anything, could potentially be in.
Real fast before we bring on Tim, the two other M&A headlines we didn't get to. Allegheny, ticker Y, is getting acquired by Berkshire Hathaway today, so that's going to be it's trading up 25% right now. The takeover price for that is $848.02 per share. And then Nielsen, NLSN, they had a go private offer. Last week they said thanks, but no thanks. So Nielsen, NLSN trading down 17% this morning because they have said no to the offer that was on the table.
That's interesting.
It is.
I mean, so they say no. It was obviously trading up. It gets back down to like that 18, 19 area where it came from, and there was people willing to pay for it there. That's a dip I would buy. So, I mean, am I buying at 20 with still another buck or two downside? But maybe. I mean, that's a significant sell-off here. And obviously, it's not just going to bounce right back. Deals off the table. So there's a reason, it's trading higher. So it loses all that premium. But it comes back into where it was. I always like that when there's a potential for a deal falls apart, comes back to the level of, where it was prior to the deal. So that would be like 18, 19 if it got back down there. I think you do buy on that dip. Kind of reminds me of Kohl's to a certain extent, where Kohl's came all the way back down, obviously brought down by market effects. And then the deal comes back on the table. And the stock, rips higher there. So it's kind of like a little call option on the potential for a deal to maybe eventually come back on the table. Maybe they come back with a better price.
I don't get how Nielsen is still in business, but whatever.
Boeing's ripping higher right now too, by the way.
I told you that Nielsen sent me a $2 offer an offer in the mail, and then they bribed me with $2 to participate in their survey. But whatever.
No, you didn't tell me that.
Whatever.
What's Boeing doing? What is there a headline on Boeing just ripped? Bring up the chart.
Yeah, all right. Give me a second. I was going to bring on Tim Quast, but Tim, I'll get you here. 1 second now.
We're coming.
4 things at once. All right. Do we have news on Boeing? Checking my thing. Checking that.
Just ripped up $3. I was just wondering if somebody said something. Maybe.
I mean, I just saw they were talking about it on CNBC, but I don't know what they were saying.
Anyways, maybe it's just, but it'll look like to me like something, something news, because that was a big candle there. Just was like 181 and boom, it was 184. So I was wondering if something was said by somebody. So okay, well, let's go grab Tim.
Checking around right now. Now the problem with the Boeing with a headline like that is there's going to be 10 million headlines today about it or in articles, and it'll be a lot hard to get through the noise. All right, it's Mondays. You guys know what that means. We do Market Structure Mondays on Mondays, obviously. Tim Quast, good morning. How are we doing today?
Happy Market Structure Monday, guys. Good to see you.
I forgot the bushwhackers. I get all sidetracked. There's so much going on. I forgot to bushwhack Tim here. I don't even know if Tim knows who the bushwhackers are. I always do it to him. But were you a wrestling fan when you were a kid?
I was not.
You were not. So you don't know the Bushwhackers. They were
I do
from.
not.
So the background was the WWF, and they were the tag team, the Bushwhackers. They'd always come with their music, and they'd come in like this. Duh, 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 duh. I don't know why I started that with your market structure segment, but for some reason I did, and now it's like a habit. And I say after 21 days, something becomes a habit. I think you've been on the show for 21 days now, so now it's a habit for me.
There you go. That's
Tim,
what
how's
it
it going, buddy?
It's going well. Thank you. It's snowing heavily in Steamboat Springs.
Are you still skiing?
We still have awesome conditions. So yeah, the season rolls on. We were out, actually not skiing. We were out because my wife, after 2 ski-related knee surgeries, won't strap on wood anymore, but she loves to snowshoe. So we were out on rabbit ears at 9,500 feet in perfect snow over the weekend.
Nice.
Just great. Yeah.
Very
Enjoying yourself. My boy skied for the first time last week there. He's 7 years old, but he enjoyed it. The only problem he had was never really thought about it, but he got sunburned. I mean, you don't think about it when it's like 30, when it's 32 degrees outside. You don't really think about a sunburn, but I mean, the snow, the sun coming off, was a sunny day, and I'm like looking at his face at the end of the day. I was like, was he sunburned?
Was he wearing goggles?
Yeah, well, he was too, but only on down the slopes and stuff, so they're coming on and off. But yeah, so anyways, either way, he did have goggles, but he still got sunburned.
Did you teach him how to pizza and French fry? Pizza, French fry?
Right? It wasn't me teaching him; it was his aunt and his uncle. So.
Okay.
All right. I was actually trained stocks.
Tim, we were talking just now about last week's rally and sort of what to think about it. What do you think about it?
And by the way, Boeing, oddly, that is the headlines on Boeing, before I answer your question, Spencer, are, there's a 737-800 that crashed in Southeast China. Right. So oddly, that's the news. I think maybe the fact that Boeing is up is it's not a MAX.
Boeing's down $10.
Is it? Okay.
Yeah,
okay.
Boeing is getting hit on this. It was up earlier, obviously, and then this tragedy happened. So it's come back down. So it was down almost $20 at one time. It was down 18 points earlier on. Now it's only down 9, so it's bounced back. So I think it is to your point. I think if this was a MAX, this would be getting hit harder than it is. But because it's not a MAX, I think to your point is, I mean, plane crashes do happen. We don't know the reasons behind it yet, but because it's not a MAX, I think it's maybe it's come back a bit maybe since we got the tragic news.
Yep, and new options trade today. So if you have a pre-market dip like that, it creates an opportunity for a trader in new options. So Spencer, to your to your question about the market last week, once again, I'll say that the turn tends to come during options expirations. I did not hear anybody until Friday even mention the options expiration cycle and how all the things that were the trouble for the market, Ukraine and a Fed rate hike, suddenly became the reasons that the market was surging. The certainty of a rate hike is the reason that stocks are surging.
I hate that. It pisses me off so much.
It's just nuts. That is not the way traders. That's your Market Structure Monday lesson. That is not how the market works. The market is not full of illogical, irrational participants who one day sell something for the same reason that the next day they buy it. That's not the way that the market works.
The media always wants to find the fundamental reason for a move, and they don't want to hear about options. They want to hear about there's a story here, or there's something, or okay, so they're comfortable now with the interest rate picture, and that's why they're in the media. The media will always justify the move with some fundamental reason.
And then what you'll also see is, like, for example, stocks rally after Fed raises rates a quarter point, right? There was nothing false about that statement. Stocks did rally. The Fed did raise rates a quarter point, right? But when you put them together like that, you create this assumption that one caused the other, or the implication that one caused the other, when that's not necessarily true. But anyway, keep going on.
It's what the mathematicians call a false correlation.
Sure.
And there you could Google false correlation, and there are hilarious things about false correlations, things that seem to move in synchronicity. But remember, we talked on Market Structure Monday last week about the fact that tech, in fact, we've been talking about it for 2 weeks, that if tech is going to turn, if a surge is going to come, it will come into options expirations March 18th. It's going to lead into that. And why would that be? Well, because of the way that the market works, and I'll keep this very simple, that there are stocks and derivatives that trade in place of them. And if stocks are discounted relative to the derivative, then the discounted item will become the thing that you buy into expirations. And that was tech. So tech posted some big surges. Now, whether they're sustainable or not with new options trading today, that's what will remain to be seen. And here's something, the last comment on this that I would make is that today, with new options trading, two things will drive the market, and these two things will conflict with each other. And so it'll be interesting. We may have a volatile day, and whether we finish up or down will depend on how these two things sort out. It is the demand for new derivatives that expire in April. Do people come back and buy substitutes and make bets on the market and hedge their positions with derivatives? That's one thing. And then all the stuff that happened last week that resulted in winners and losers, that will sort out. And the two things will determine which way the market goes today. And I don't know. I can tell you what the broad sentiment is doing, that it has bottomed and it's rising. But there are two things that are generally signals of a top, not a bottom, that are present in the market. Again, I look at the data every day. I don't prognosticate. I just take the data as it comes. But short volume market-wide is very high. Look up NSIT, Inside Enterprises. It's 92% short. That you might expect in a small cap. Hewlett-Packard is over 80% short. Over 80% of its trading volume is coming from borrowed stock. The levels are very, very high in the market. That's not generally the sign of a market bottom, but a top. And then number two, volatility is very high. It has been over 3% in the market all year in 2022. That's the spread between the average intraday high and intraday low. Those things, high volatility, tends to mark tops, not bottoms. Again, I'm not saying what will happen, but those are some contradictory signals that we see in the data.
I mean, this is, and you're I take a quantitative approach, you take a quantitative approach. I mean, this is, the way, it's a more consistent way of trading, in my opinion, than just discretionary making calls. And a lot of people, will look, we're on a show and we all have opinions on everything. Everybody's got an opinion. But, I've said it before, I make a lot more money from my quantitative approach where I'm not making opinions on stocks than I do from making opinions on stocks. And that's mind-boggling to most people, because they think, oh, we may make an opinion, you've got to come in, you got to buy something. But you're using a systematic approach to the market.
Correct.
You're not really making opinions. You're not really trading your opinions. You're trading that systematic approach.
I only care about supply and demand and context. What is occurring around us at any given moment? There are important things, the beginnings of months, the options expirations period, and the ends of months. The market moves in a monthly and quarterly cadence. And why is that? Well, it goes back to the whole way that money works in the market. If you're running a hedge fund, you're reporting results monthly to your clientele. Well, that's very important. At the beginning of the month and at the end of the month, between those, you have a chance to produce a return. And that's going to affect your behavior. That's trillions of dollars. Then you add in the tens of trillions of dollars that are benchmarked to things. And it's every quarter, you're going to make some adjustments. It might be exposure to the market. You may talk to your clients and say, we're now increasing our exposure to value and decreasing our exposure to growth. We're increasing our exposure to fixed income, decreasing our exposure to that's the stuff that's going on. So you can't, traders, think that all the time, every day, the same stuff is going on. You have to think about the context. So I'm very much focused on supply and demand. And those are measurable things. They're not perfect. There's no perfect system. But I can, in my own accounts, that when I follow the math, and I always outperform the market, period. So there's something to that.
Can you give us maybe some ideas for this week, Tim?
So yes, and here's a great way to look at. Let's take 4 of the top, excluding Nielsen, which you talked about, a deal stock. By the
Yes.
way, you can use Market Structure Edge to look at deal stocks and determine whether these deals have substance or not. If you see heavy short covering, there's a probability that there is merit to a deal. If there isn't, there probably isn't merit to it. But I want to look at 4 things last week that, besides Nielsen, were top performers, and let's look at the supply-demand balance in them. If you like, we can look at Nielsen really quickly here. They reject this takeover bid. So what does the math tell us about? Could we have already known that? Well, the green part is the demand side. Very good demand. Supply did dip, but it's almost 50%. It's 46% of the trading volume that is borrowed or created. In deal stocks, what we have seen for 15 years doing this is that in deals that will stick, those levels drop to about 30%. So the math was already telling us that, save for the covering by people who were caught out by that, there was a belief this deal isn't going to happen at this level. Now, if the deal is revised by Elliott and its compatriots in this transaction, and we see the levels drop, then it's got merit. But let's go look at Moderna, big performer last week. Is there merit to supply and demand in Moderna? And what you want to look for is a diverging supply-demand pattern. It's that simple. So here's Moderna's demand, green. This is price, just closing price. Here's the supply side. Well, you have a divergence. Rising demand, relatively flat supply. That's why price moved. But look how high the levels are. 60% of the trading volume in Moderna is artificial. That means if demand stalls, the price will go down. So I would say, no, that was options driven. That was an options driven trade, probably doesn't stick. Look at Etsy, another great performer last week. And Etsy is it's a trader's dream if you're on the right side of it. It's incredibly volatile. It tends to move violently during options expirations and around earnings. So here's the demand side. It's at 1, and the supply side took a dip. That's why it surged. But look, once again, it's 60% short and a 1. I am not buying that. You say, well, then I missed out on all those gains. Well, if you've gotten those gains, take them, because that is not a pattern that lasts. And it's very mathematically consistent. PayPal, another great performer last week. So what happened with PayPal? It's again, I look at the supply-demand equation and say, okay, I can understand why it moved. There was a lot of demand for calls going into options expirations. That's what this big dip tells us. But it also tells me that with demand rising and now supply rising too, it's a lot better than the other two. It is actually the best of the lot because those levels are lower. The run is not going to last again. So you should know that as a trader. Know when you should get out of something, no matter what the charts are telling you.
So on something like PayPal, it's telling you to take the profits from this recent run?
It is. Yep.
Yeah.
Even though the demand is still rising, I don't like rising supply and demand at the same time. Those will cause the gains to run out of steam. That's what's going to happen.
I'd be curious. Can you look at any one mega cap? I don't care which one. Apple, Amazon, Microsoft.
Yeah, let's take Apple.
Pick one.
Yep.
I want to look to see that right now.
Okay. So here's Apple, and I have a little bit of Apple, but only because I thought all the money was going to come back into tech, into options expirations and index rebalances. It's not great either. It's got the sentiment has just ticked up, and supply is flat. That tends to sustain gains. But what if it doesn't ever get back to 5? Apple is spending a lot of time the last 15 days below 5, and that's why it struggled. It's not bad. I look at Apple and say it's not a bad thing to continue to hold, but it's not. These are not the conditions from a supply-demand standpoint that tend to give you big gains. Interestingly, Love, yeah, it is. I mean, I'm not saying that Southwest is going to surge. I'm just saying this is the kind of condition that produces gains. See this big divergence between demand and supply? Demand rising, supply plunging. into new options trading. That tells me there's a lot of demand for derivatives in Southwest. So that can produce a nice move in the stock. Not absolute, but that's that consistently in the math. We study this all the time. Well, I've got a full-time person on staff who all he does, he's a mathematician out of the University of Kansas who crunches the data like this all the time to look for those conditions. And it works.
All right. If you want to know more, Tim joins us every single Monday. He also joins us once a week on Benzinga Live. But if that's not enough for you, check out his platform, the one that was on the screen there, Market Structure Edge. The link is up on the screen. Use the code BZFriends20, BZFriends20 to get $20 off your first month. That code's only good if you use it in the next couple of weeks. So do that. Tim, always a pleasure. Thank you for joining us.
Always fun to see you guys.
See you, Tim. Thanks.
All right. Enjoy that skiing. It's 8:55. We got 5 minutes left in today's show, so we can do some ticker time.
That's a good idea.
I just like to keep an eye on my movers tool and see if there's anything that's been moving in the last few minutes, any news that I missed. Oh, before we do that, I want to mention Coinbase. It's been a while since we've heard about Coinbase. It's also been a while since we've heard about Jim Chanos, the famed short seller. Well, that was fixed on Friday when he hopped on CNBC and announced he is short Coinbase. I have no idea where that stock is right now.
It's come back, but if you look and bring up the Friday chart, it's really interesting. It shows you these algos that just trade off opinions on CNBC. Like he said he's short Coinbase, and they hit this down $11 right on the initial. You see that? That's the original, like, algos, oh my gosh, Chanos is sorry, sell.
Yeah.
And then like 2 minutes later, it's back up to like 182, and it's just the algos just again overshooting. They continuously seem to do this, and that was a huge overshoot. Bounced back. It's down $3. It should be down. Chanos disclosed a big short position. I mean, Chanos is well followed, so it should be it's worth something. But to knock $11, like 7% off the price immediately because Chanos is short, I mean, it seems ridiculous. I am long Coinbase. I'm still long Coinbase. It's been a bad buy by me. I stuck a little bit in the long-term portfolio for a growthy name and been dead wrong on it. So I don't know what to say on this one. I kind of feel like, though, that the bottom is in a lot of these growthy names. So I'd probably be a buyer pullbacks here.
Okay. All right. And then let's do Nike real fast because Nike, actually, before I do Nike, well, in that vein, let me bring up the earnings calendar for the week. There really isn't much.
Yeah.
But there are a couple. So here's the earnings reports for this week. You can see we have, that's not it. There it is. Nike tonight. Tencent Music is tonight. Golden Nugget Casino is tonight. Tomorrow, Carnival, Adobe. Wednesday, General Mills, Tencent, KB Home. Restoration Hardware, Darden Restaurants on Thursday, Neo on Thursday, but Nike is going to be your big one, and that's tonight. So let's bring up that chart now and see what we have here.
I got a trading position on, so I can't give an opinion on it. I mean, when I say I've got a trading position, I'm going to be actively trading it at the open. So I don't talk about stuff that I'm going to be trading at the open. So sorry on Nike, but there's some other stocks. Adobe I don't have. I could talk that one. That's going to report earnings here too. There's often a positive alpha associated, with owning a stock ahead of the earnings report. It's a light week, like you said, DRI, KB Homes. I mean, KB Homes interesting too, just because we've already heard from Lennar, so we kind of know what to expect.
That's true.
LEN had a nice pop off of its earnings. The earnings were pretty good. I am somewhat concerned going forward about demand in home builders for the simple reason is that the prices of everything have gone up so much that I think eventually you get some demand destruction there. So I know they look cheap on a multiple level, and maybe that's all priced in. But I'm kind of keeping away from the home builders just for that reason, that I feel like there's going to be less people building homes with the increased cost of materials.
What about Disney here? This is interesting. Disney was the subject of not one, but two negative articles in the last few days, one from CNBC, one from the Wall Street Journal, both kind of vague, but both like implying that Bob Chapek, the CEO, is I don't want to say if in trouble is the right word, but they have some macro challenges that they're facing, and Bob Chapek is under pressure to navigate these tumultuous waters. So you tend to see articles like this happen whenever there's some like general investor investor disagreements or frustration at leadership. They tend to start talking to the press and to get their point across. So you saw 2 of those articles happen in the past couple of days on Disney. They also announced that they're closing Shanghai Disney because of COVID. So, and that's closed as of today.
Tough chart, kind of in the middle of nowhere. I'm long it, been long it for a while, bought it too soon. Bag holder in Disney. I'm holding on to it though. This is the longer term account. I'm holding on to it for the simple reason that I don't know. I feel like eventually Disney's going to win.
Yeah, but again, we are only in year 1 or maybe this is year 2 now of the new CEO tenure, and you always sometimes you do see when new CEOs, when a legendary CEO like Bob Iger steps away, that can be the start of a longer term trend, and just because the market values certain CEOs above others, and you can look at the Starbucks chart to see that happen, to see that in practice last week.
I think I will add to my Disney position at a certain point because it's a smaller size position. I think the 130 put in a nice double bottom here now. So you've bounced off of there for 4 days straight. So maybe you get a pullback into the mid 135 area or something, and then you strike. You can, it's not absurd to chase it here at 140 either. I mean, it's rallied, but a lot of stuff has rallied, but it did rally, $10 last week, 8% last week. I'd like a pullback, a dip to buy. I'd be buying dips on Disney.
All right, guys, that'll be a wrap for us. If you're wondering where Joel is, he'll be back tomorrow, or so I've been told. But I had fun. I hope you had fun. Dennis, have a great rest of your day. Be good, stay green. The rest of you, don't go anywhere because live trading with Benzinga is coming up live in like 4 minutes, 9:05. So if you could be so kind and drop me a like, I'd appreciate that. Whether you're watching us on YouTube, on Twitter, on Twitch, on Facebook, or even on LinkedIn, just hit that thumbs up button. Hey, if you want to subscribe to Benzinga's YouTube channel, please do that. If you want to become a member, get access to custom emojis, badges, and more down the line, check that out. Just click the join button on the homepage of our YouTube page right there. Other PSAs I have: Benzinga Pro, get it for free for 2 weeks, pro.benzinga.com. There's a discount code to Benzinga Pro in the link to in the description underneath this video. There's a link there near the top of the description. Get 25% off Benzinga Pro. Check that out. I'll be talking more about our upcoming events, especially the FinTwit conference later on today. So if you don't know what that is, you can just go to here. You know what? I'll put the link up on the screen for it because need to make it as easy as possible. The link to the conference in Vegas that I fully intend to be at. Don't I have it, Andy? I should. Give me 1 second. Go to BenzingaEvents.com. Click on FinTwit Conference. There we go. All right. Here's the link to learn more. It's in the chat. Bada bing, bada boom. Middle of May, May 13th and 14th. I'll be there. Many others will be there. Check it out. What else did I want to say? Let's see. Oh, Mitch is talking to Super League Gaming. If you guys like that stock, SLGG, that'll be at on Money Mitch today. That'll be at 4:30 p.m. Eastern time. So stay tuned for that. He's talking to their CEO, Ann Hand. All right, I'm going to hop though. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Born to be free. I need to follow up, but I'll get back to you on that. Guys, smash that like. Catch you later. Live trading going live right now, and good luck today. Stay green.